Excellent. All right. Oh, Bubbles back. I remember from last week. Did you ever watch The Wire? Bubbles, he was my favorite character. All right. Well, as always, try and keep it kind of tight. I would describe this rally as remarkable. I've seen a few people on Twitter, social media, in the chat room, everything calling it the most hated rally ever. I don't know about that, but it is absolutely remarkable in the face of still challenging news and uncertainties and things like that for us to be up in an absolute straight line over this amount of time. One of the things I said last week is I expected us to chop sideways, but I was really had to take the bearish bias off after the power of the rally the preceding week. Well, that just continued last week. We went through a bunch of levels that should have provided some resistance, and we just did not even pause. So this is ES. You can clearly see we just busted right through to new highs on Friday with the help of the oil breakdown and some of the news flow. But even the challenges that came out over the weekend, we'll see what happens when we open in 30 minutes. But one of the funnier jokes I saw was, in the face of all this news flow, we could be down as much as 30 basis points on Monday. Just shows the relative strength that we're experiencing. I do think, as I thought last week, and admittedly was wrong, that we need to do some sideways action to consolidate this. This is a remarkable move. We've got a lot of news flow, a lot of uncertainty, but we've also got some very important earnings coming out starting this week, and that'll be very influential as to how we go. New highs on ES above this, and I'm looking at 70.66, I think, is the top of this trading range and where the volume on this histogram really disappears. Oh, sorry, I'm doing this on the wrong screen. This should show up. So, okay. This is 70.66 on ES, and it's where this volume histogram really disappears and things get thin up here. That's the first test. I'm going to see where we're opening at the open today at 6. But as long as we hold above there, kind of hard to be bearish at all. The close-up, you can see again, this is the histogram and just reflects the trading range here, and just this straight up Friday when oil really broke down. NQ, it actually kissed this number, which I guess is 26. I think it's actually 26,869 and a quarter right here, and we did get to 26,871, but pulled back. I think we closed at 26,825 or something, right at old highs. I'm wondering, last week there were a couple of things I could point to and say, hey, this is a little bit of resistance that might give us a pause. If we pause here this week, this is what I would point to and say, yeah, we needed to hold a little bit. I'm looking at 26,500 as a small support level, and I'll show you on the next slide. But 26,240 is a little bit more important, where the volume really picks up. If we get down into there, we could start to talk about a failed breakout, but I think it's way too premature. Let's just wait and see how we open. I just don't want to be saying anything that contradicts. This is a very bullish move. Yes, I expect sideways, but I don't want to be putting bearish scenarios on the table without reason. NQ, again, this just shows the detail. Down here is where the 26,240 picks up. That's why I'm getting this number right in here. And then there's this 26.5 number comes in right into play up here. RTY, also a new high. This is one I was looking at. It was the first to break down, and in the rally up last weekend was to right about here. Really pretty close to old highs. Very quick recovery, and it certainly followed through. And I don't know if it was the first to make new highs, but certainly did. Also looking extended, also needs consolidation, whether through time or price. Let's see, which it does. There are a couple of things I wanted to highlight this week, and this is absolutely one of them. This is a close-up view, and I'm going to give you a longer-term view. I've been watching this since about August of last year, when it came into play, right? Yeah, I guess it was right around here. It started to really hold up. And it's very important to point out, this is before gold really took off. It was gold, and that it was holding this resistance level. I was talking to, at my previous shop, like, hey, weak dollar plays have to be on the, on your radar screen, and gold and silver certainly worked out. I wish I'd been able to take advantage of them to the extent that I should have. I did all right, but I didn't do great, and they were opportunities to do great. But this very small, very tight wedge that is very much being respected here and has already broken, we got this failed breakdown, rallied up and tested, and we're right back to this level. If it's possible we trade sideways through it, I don't expect that. I don't know what it is, but something that gets us to push down. If we get down below about this 96 level, I would be looking hard at weak dollar plays. I think they will lead the market. They certainly did last fall. I can talk a lot about fiscal policy and how much we're spending on wars and all sorts of things like that call us into question. And if that's the case, particularly precious metals, last week I said, I think energy might take over precious metals as the lead weak dollar play. Still a possibility. We just got a bigger breakdown. This is just a longer term chart. This is a weekly chart, and it starts right here. This is early 2012, a big test in 2021, and then another test here. I've been watching it after this point, but it really firmed up. And this to me is confirmation. This is a very valid trend line, even though it's only 3 data points. It's over, 15 years, and it's respected it for 18 months in here. So that's one of the reasons I think this is so important. So if we break through it, I'm looking at these lateral levels and see what'll hold up. But that I will be looking hard at gold, energy, small caps, EEM, a bunch of things that typically do well, weak dollar plays. And I probably will try and spend more time on this. Very important, and one of the reasons I'm spending a minute or two on it. Not much to talk about here. I think these are being managed. I think Besant's in there and, keeping everything under control. It's been too tight for too long in the face of some things that should be sending this all haywire, and it's just very carefully controlled. I don't want to have a conspiracy, my tinfoil hat on, but all you have to do is look at the price, and everything's very under control in some very weird times. Same thing here. This is a historically tight range, as you can see. When it breaks, it'll go. But until it breaks, there's really not too much to talk about. I'll just leave that there. Overall view, this is just where I sum up kind of everything in equities. And when I look at it, we got this breakdown, failed breakdown, and then just absolutely off to the races. News is, I'm not going to say awful, but very concerning, with a lot of things to call into question. And this is telling us something. There's a lot of information here. I threw the Qs on here as well. Same thing, just big gap, going. There's huge demand. I think everyone's seen the same headlines that I have: CTAs offsides and institutions underinvested. And I suspect we've got overseas investors who are looking at us as the safest house in a bad neighborhood. If China's troubled, Europe's a lot more exposed to everything that's going on around than we are. We may be kind of leading the charge, but we're also the most immune. And I really think we're getting some flows as a result. Just something to think about. No idea how to interpret it, but if things go sideways, maybe that money goes away. We will see. I spent a couple slides on breadth. I saw a few headlines for one standard DO in terms of market breadth. I looked at their slide. I kind of get it, kind of don't. So didn't spend too much time on it. I just did my own look into it. This is very straightforward. New highs minus new lows over a long-term time period. Things were great in the early 20s. This is where 2022 came into play. And we haven't been above this level in, 3-4 years. It's 4+ years. And this is a breakout. We got to sustain it, but there's information right here. Breadth that looks pretty good right there. NIMO. This is one of my favorite metrics. I use it usually for very oversold conditions where we were just a few weeks ago in late March. This to me, below negative 80 is a low frequency, high impact buy signal. It works very high batting average. Aside from the fact we're now up to overbought, and so that just means that we need some consolidation, but this is absolutely a sign of strength. If you come back and look at how the S&P has performed after these, I'll call it a thrust higher, does very well there. We'll call this one, does very well there. This one is the only one I could see, and it's not immediate. Yeah, it's pretty immediate there where we rolled over from that point. But here's another one. You can see we went higher. Here's another one. We went higher. It's pretty reliable when you see this push higher that it follows through. Not only is it consistent with a move higher, but a move higher follows. Another advanced decline line. This is S&P. We're basically at a new high, and this is NASDAQ. It's just a different view of the previous slide that I showed you. It just looks fantastic. So for those who are concerned about breadth, I don't see it. At minimum, it's fine. I actually think it looks really pretty good, but things could change relatively quickly, so I don't want to get over my ski tips on that. Russell 1000 value. This is one I've been talking about, value versus growth, and how things sort of turned back, I think, in around October when semis kind of peaked and Bitcoin peaked and a few things changed. And value had been relative strength relative to growth for the first time in a long time. Still is, but something changed last week. So first a new high, looks very good. At new highs, certainly looks strong. But NASDAQ, growth, not NASDAQ, which had been lagging, really caught up last week. That's a big move, almost back to old highs. And worth noting, I'm starting to think that semis and AI could be taking over leadership again. They haven't really been leadership since October, but last week definitely changed that picture a little bit. This is one I've had on the screen for a little while. It's showing small caps relative to NASDAQ. It's been in a downtrend for years. This is only a small piece. It's much worse than this slide shows, but this shows the bottom that I'm looking at in relative performance. It's holding up so far. I do think small caps could lead performance this year. Let's see. They tend to do well in a weak dollar environment as well. Quick drink. China, okay, good. That's it's performing, but it's not great. Contrast it with EEM. China is, I don't want to say it's lagging, it's performing. I don't want to say anything bad about it, but the difference, I think, is a stark contrast. You can see it here. We really got over our ski tips here, big push to highs. Then we dumped with the market pullback, and now we're just ripping back to highs. I've got to look into the construction of EEM ETF. I'm curious and would like to understand it, but there's definitely something going on here. Last measure of breadth. This is just one I typically use. Very simple, very straightforward. Percentage of stocks over 200-day moving average, and this green line is nothing more than the 50%. We dipped below briefly, back up, and now looking quite healthy. We're not overstretched the way we got sometimes back in here, but just very comfortable, safe level where you can't say it's a problem. It's like the definition of fine. Slide I like, but not too much to talk about here. This says mega caps are back. Look at the bright green and all the big names that led us for years. Semis are back. And then just a couple of pockets of weakness here. Energy, of course. Utilities, some of the ones you'd expect. But overall, this is really good. And I don't know what happened with Netflix, but that looks stock specific. Oil. I've been highlighting this level. This gray area has been on my chart for literally years. It came and it was very valid in here, pushed above, came and then consolidated. When we broke down through here, took everything, the equities took off, and this just said, hey, a very significant breakdown. As long as we hold this 76 level, I'm going to call this constructive. This is pretty remarkable news. Also, we got really overcooked. I do think energy, I think crude, particularly Brent, seaborne, looks very constructive, but even WTI and then energy stocks, which all had big pullbacks this week, still look constructive. I'm not, especially if that weak dollar situation plays out, I'm not bearish on these at all. We just got overcooked. Natural gas, less compelling, but more interesting. I call this one the Widowmaker. It has been garbage for years, and this looks like a change, and we're holding in. It's just early to be drawing any real conclusions. I've talked to a couple of guys who know what's going on with the Qatar facility and how important that is to LNG. I don't know if LNG can really have a swing impact on U.S. produced natural gas. That's what this shows. But it's okay, not good. Just pay attention, but I don't know what to make of it. Gold. This is getting interesting. This is the 150, which I use instead of the 200. Just something I learned years ago. Held like a champ. Now we're right back to the 50 and a little bit of lateral resistance here. Decision time. I wouldn't be surprised to see a little sideways to down until the dollar decides which ways it's going to go. And if the dollar goes down, we're probably going back to 5,000 real quick. I think we're at 4,800. This is the GLD ETF, so this does not correlate perfectly. Bitcoin, not much to say. It was fantastic for years. People made millions, and now it's not a risk-on asset. It's not a risk-off asset. It's not a flight to safety. I don't know what to make of it, but it's just doing nothing for a few months now. These are short-term charts of energy. You can see sharp pullback. I think the fact that refiners, the broad sector, and exploration and production, and even the majors all pulled back the same. This is just people, fast money running out. I don't think there's any information to take for it, except for it's pulling back, as you'd expect with oil pulling back like that. I'm not making too much of it. This is only, back into mid-March and early April on a couple of these. I got to line up my time frames a little better. Semis. Wow. I've made a real note of semiconductors, and tech has not been leadership since October. I think that just changed. I really do. People are talking about how Micron MU alone accounted for, I think it's 50% of the increase in earnings expectations of the S&P 500 from their recent revision. Of course, 100% of that is from the AI CapEx. I think that's being reflected here. There's a lot more earnings coming out of the CapEx build out, and the stocks just have to move when they're making that much money. Micron, Nvidia, all these names just killing it. So I don't know how sustainable it is, but they are back to leadership almost definitively after the last 2 weeks. Sectors, just key sectors I look at. XLY looks pretty good. XLV, healthcare is very mediocre. Industrials look really good. And then financials look okay. Overall, this tells me that, it's really hard not to be bullish. Some sectors look okay. Obviously, some are going to do well. Some aren't going to do as well. But overall, we're intact. So, and these are just my long-term channels. We're in the middle. When we break, I think we're coming down here, but who knows? That could be years from now. I will highlight NASDAQ back here. This is a long-term logarithmic channel, and to be busting out the top, something's got to be going on. So I see Dave just joined us. Sorry about that. I'm going to wrap up and just highlight, kind of tell you what I tell you, show it to you, and then tell you what I told you. Breadth looks good. Oil broke, but is still constructive. Remarkable strength is matched by breadth. It's just, I think we have to consolidate. We just can't keep it going at this pace. The dollar is the other one I really want to highlight. So I'll stop there. Happy to take any questions if anybody's got some, but that's the presentation. Anybody, you can just hit me in the chat, or if anybody wants to turn their mic on, that's fine too. All right, I will call it there. Good luck. I'll just post a couple of quick thoughts after 6 o'clock when we see the things open. And I do have a few charts that I posted back in the chat in here if you want to take a look at them, just some things that stood out to me. Last comment, I'm trying to build conversational critical mass in the room. If people have thoughts, just slightly longer term, big picture longer term outlook, drop them in here. We greatly appreciate it. If you want to come in here just to chat, I know we've got some really smart guys lurking. We just don't have enough momentum for people to be posting enough.